how something is going to scale. Another little version, one other thing that we're doing, you know, grand challenges are sort of all the rage. We're doing one right now on powering agriculture with clean energy. Because the problem, you know, that you all understand is we're not going to, you know, we can't get electricity to people one light bulb at a time. If that's just way, way, way too expensive. There have to be larger load users, and who's that going to be? It's going to primarily be agriculture, but of course if it is not clean energy, then the very, very same poor people that you're actually trying to, whose lives you're trying to improve, will be sort of a two-time loser. Yes, it will grow, but it won't be, you know, it will, global climate change will grab back all of those benefits. So here what we're trying to do is now nobody, this is a silo problem, right? There's agriculture, which has its own risks, and there's clean energy, which has its risks, and the combination is like a death zone. There's very, very little money going into that. So first of all, we ask for ideas. That's a kind of classic, you know, what innovations do you have? The second thing is that we're talking about supporting financial intermediaries, social impact investors who say, I know how to get to these businesses. I've got a great idea. I know how to do it either on the demand pull or the supply push. And where we would provide whatever they say. Do they need first loss? Do they need this class of investors that are willing to work with companies, stick with them, teach them, grow them, and get them ready for more commercial investing? Next stage is much more commercial private equity in agriculture, but you only get our money. This has not yet happened yet. This is an idea that we're working on with the African Development Bank, where they're talking about a lot of money, you know, $500 million is going to be invested, and it's going to be hard to raise that money because it's can't all be DFI money. It's got to be real private money. But we want to draw that agricultural money into a clean energy space. And if you come in, we'll give you, our money will serve as either loss mitigation or upside returns. You win either way. We won't take, any of the people that are in this first loss category won't take the returns. Idea is to leverage and to get a lot of the people in this room into this space.
Thank you, Penny. Frederick, now you're really on the commercial side. You have to convince investors to invest in socially responsible products. What are your perspective up to 2020? What do you think will change, and how will investors change, and how will the approach of your company will change?
Good morning. I'm sure that most of you arrived yesterday or today through the report, and you looked at the advertising. There is one advertising with the key tagline and the key message. Tomorrow needs care. Yes, tomorrow needs care. I think that as an asset manager, we will have more and more pressure to act as a responsible investor. Why? Because there is a key challenge for us, for you also as a citizen, maybe as a European citizen. It's about retirement. There is a real shift from defined benefits to defined contribution. And clearly it will address huge flows moving forward. And it's a huge opportunity for sustainable and responsible investments that will give us the opportunity to introduce capabilities, different capabilities, equities, private equity, infrastructure funds. Because clearly in this space, the investors have a long-term investment already. So that's a challenge and a key trend as an asset manager. Second trend, if I can define this trend, it's about transparency. I think that we will have higher standards in terms of transparency. We address this trend and also this client expectation by providing extra financial reporting. I think that up to 2020, we will have different reportings, different standards, with more information, and if I can say, with a broader scope. Also, I think that internally, I will say that clearly we will integrate and we will have integrated ESG criteria across all our investment centers in BNP Paribas Investment Partners. There is a key trend internally. We want to incorporate more and more ESG standards into our investment decisions. We respect the 10 UN Global Compact principles, and I think that through these principles we will have higher standards. So, in a nutshell, clearly the retirement market is a huge opportunity. Transparency through, if I can say, added value reporting, and last but not least, for us, yes, across the board we will have integrated approaches.
Thank you, Frederick. Gloria, now you heard about really the small scale in Africa, what's happening there, and how do you convince investors now? You want to invest in small and medium enterprises. How can you say that to the investors, these are small enterprises, but anyway, we have a standardized approach. How does that work, and what is your rule-based approach you're currently implementing there?
We're very focused on economic development, and we're very focused on providing debt. That's just our current fund. And I'll back up a second and just tell you sort of why the fund is created that way, and then I'll talk about how we do that. As I said when I started, we're actually focused on taking pools of investors and matching them to investments, right? So we believe in, I think everyone in here, when we were talking just now, mentioned it's important to scale. And we really, really believe in scalability. We think that's how we're going to move this forward. And so we spent a lot of time understanding what is it that the retail investor in the US was looking for. And we started with specifically what did the fund characteristics need to look like in order to deliver those particular kinds of returns, those particular kinds of parameters. And so really the fund is a debt fund because retail investors in the US are looking for yield. They like products that have a current pay. And there is a target of current pay. Our fund is a 7% annual yield, which that was the target that makes it competitive. And so starting there, we basically said, okay, with a focus on economic development as a firm, with a need to create yield, then that basically means we have to provide debt, right? So, in order to provide debt in local economies, most of you here have probably done investing in different countries. Based in the U.S., it's tough to make really good investments in other countries unless you have people there, feet on the ground, doing it. And again, with a focus on scale, we said, well, we can either go out and hire all these people all over the world, or we can find managers who are already investing in debt in those countries, doing exactly what we want to do. And so we went out and found partners, investment partners. These are investment firms who've been making loans to small businesses in those particular countries for a minimum of 5 years, delivering the kind of returns we're looking for. And so that's how we sort of created a product that scales. We've basically said, let's use people that are already doing it. And so to find the businesses, basically all of our sub-advisors, which is what we call this group of investment firms, all of our sub-advisors have, because they've been in the market so long, have lots of deal flow partners. So they have banks, they have accountants, they have attorneys, they have other business owners who feed them deals all the time. And so, when you think about taking an investor and saying you can loan money to a small business in Africa somewhere, it seems overwhelming, but the key is to take a professional approach to investing, and then to the investor make it seem simple. So when we feed back the stories and roll up the statistics, it will feel very personal, and we'll be able to give them examples of, this business, and you created this many jobs, and you've invested in these countries, and we'll make it very real, very personal. But behind the scenes, it will all be a very professional approach to managing money.
So, Frederick, about this pooling and scalability, do you have any examples from your area where you really can say, we have a very small